Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Victor Adair, just retired from nearly 50 years of being in the brokerage business in BC. His website, victoradair.ca. Welcome back to the show, Victor.
Good to be back with you, Jim.
Victor, the major North American markets have been surging the past 6 weeks. The Dow up about 12%, NASDAQ 100 up nearly 15% all around the world. Stock markets are at or near all-time highs. Before we talk about specific markets, what do you think is causing these runaway bull markets?
Don't get me started, Jim.
I just did.
Yeah. Well, there is a classic old saying that markets go up when buyers are more aggressive than sellers. And I don't mean that to be a smart-ass answer. I mean, it's really true. But you could say then, well, what is motivating these buyers to be so aggressive? And then you can list off things like, there's a flood of money in the world, as the central banks crank things out. The various governments have their fiscal policies or programs. You just can't fathom, for instance, in Canada, how much the federal government has created out of thin air to keep the economy going. There is TINA, there is no alternative. I mean, with interest rates down near zero, and by the way, we have to make room for the real estate boys. They would tell you there certainly is an alternative. The real estate market's red hot. But, just that expression of there is no alternative. I mean, the market's going up. People want to buy a winner. It's been going up in some form or other for, a few decades now. I mean, I remember back in the 80s, before color television, the stock market was dead in a doornail and the commodity markets were hot. But certainly, in whatever time frame you want to look at over the past several years, it's been going up, and you can get all these studies. It's proved that if you put money in the stock market, you're guaranteed to get rich, and so on and so on. On the short term, we have certainly momentum. People will be chasing things, and it's not just people deciding, over the kitchen table, gee whiz, we should take our savings, which we're getting nothing for in the bank, and put that money into the stock market. There are people who are paid to look after other people's money, whether they're running mutual funds or what have you. And if those guys don't keep up with other guys like them, they lose their jobs. So, they get a career risk in not being in the market, and on and on and on. Certainly, short term here, there's been hopes that there will be a burst of pent-up demand, once we get this virus behind us. And then every once in a while we think, oh my God, we're never going to get rid of this virus. The vaccines maybe they're not working, and there's a variant popping up here and there. Peak stimulus, how about that? I mean, they're creating money like never, ever before. There is euphoria in the market, blah, blah, blah. I mean, I'm giving you the usual rationales. And, you could say it is what it is. The market's going up, and it'll keep going up until it stops. Now, I will tell you that I'm very aware that I like to call bullshit, as we used to say, if we use that term on your show, where I think that the market has run away too far, too fast, too high, and I've got some strategies on what I would call limited risk strategies, where I'm betting, over the next month or two that the market will have a correction. That's what I'm doing. I see very low volume here the past couple of weeks across the markets. Volatility, the stress factor, say, is very, very low. And then we have, in the options markets, puts and calls, puts. You would buy them if you thought the market was going to go down in the simplest way. Nobody has any interest in owning puts. The ratio between the amount of calls that are getting bought and the amount of the puts that are getting bought, I don't know, something like a 15-year low. So when the market is so enthusiastic and so starry-eyed about racing to the upside, and nobody wants to, spend any money on insurance in case there's a dip, I'm interested. So that's kind of my view. And I think it's not just stock markets. I think, it's across the market. We've got this starry-eyed stuff going on. I want to say, across assets, I should say, this starry-eyed attitude is out there.
I have a question here. It seems to me the top 40% of incomers haven't really been affected at all by the COVID crisis. They can't spend their money on travel right now, so they might have a surplus of cash, so why not put that into the stock market? Meanwhile, the 40%, the ones hit the hardest by COVID, people in the service industry weren't big stock market investors in the first place. So is that a major factor? The top incomers are just looking for a place to put money that they're not using.
Oh, for sure. I heard Colin Powell, the head of the Fed, and I can't quote him exactly, but in effect he said, I do not think that what we're doing is increasing income inequality. And I thought, how can you say that? I mean, or maybe that's just the party line. I mean, he's a smart guy. You got to know, absolutely. When the Fed prints money like that, it causes the stock market to goose. Most of the stocks are owned by, call it, people that are in the higher income or at least higher net worth bracket. For sure. Absolutely. No question in my mind that printing money like crazy is increasing income inequality. And the Federal Reserve seems to have widened their goals. They're going to try to keep employment at a full employment level. They're going to do all kinds of other nice things as well as manage the environment, it seems now. So whatever, central banks printing a lot of money. Jim, absolutely agree. The folks that are the worker dogs, as I call them, the turnip hoers, that are out there in the service industry, that are almost living paycheck to paycheck or whatever. Yeah, life is getting tougher for them, while the people who have a lot of money, have a lot of that invested in the stock market, have never been doing better. And in terms of not traveling, I should point out to you that the sales of recreational vehicles, with the Winnebagos and that sort of thing of the world, are hotter than they've ever been. So, yeah, people maybe aren't getting on a plane, but they're jumping in their Winnebago.
Try getting to Japan in your Winnebago.
Well, there you go. Yeah.
Someone will come up with an amphibious one. Don't worry. Oh, it's called a houseboat. Oh no, a duck. The truck that's also a boat that was used in World War II. Meanwhile, let's get back to business here. Markets seem to think that inflation is coming. Do you agree?
Sure. Let's say it this way. When you have the central banks printing as much as they do, it does lower the purchasing power of dollars that were previously in existence. Okay, I mean, that's just how it is. If you're making soup and you want to make it go further, you just pour a lot more water in there, right? Then the soup isn't as good as it used to be. I mean, money used to be a store of value. It used to be a medium of exchange. These days, I don't know exactly what money is anymore. I think it's very easy, for instance, to confuse money with credit. And they are essentially very different things, but maybe in our new world they're not, especially when the MMT crowd says, you don't need to balance a budget. You just print the currency. That's all. You just keep doing that. But they will allow that if you print way too much currency, that there might be a risk of inflation. I think, what are these people smoking? But yeah, certainly there's inflation. People, I think, understand that when the central bank is printing like crazy, the purchasing power of their dollars, their money, is going down. So they do stuff like go out and buy real estate, especially because real estate's going up and they want to buy things that are going up, just like when they're in the stock market. So however you get there, whatever kind of a circuitous route you take, yes, we have inflation. The Fed is even saying they want inflation. And, maybe in a Machiavellian sense, what they want to do is inflate away the debt that they have issued. I mean, I get by that, but you don't have to get too sophisticated. You just realize the purchasing power of your dollars is going down. I mean, would you want to take, let's say, $100,000 in cash, put it in a box, and hide it in your basement? Well, if you're a drug dealer, maybe, but, if you're just a normal person, or, go out and buy something with it, like a bar of gold or a part of a house or whatever, then, to me, that's inflation.
Well, somebody explained to me if we have hyperinflation and they're printing $100,000 bills, will your mortgage holder accept 5 of those $100,000 bills and say, yeah, your house is paid for?
I don't know that we automatically go to hyperinflation. I don't know that it goes like that, but I think there is inflation. And by the way, I do have a $100 trillion Zimbabwe banknote. I have a lot of banknotes. I collected banknotes for the past 40, 50 years. And, that's the dilly in my collection. And I suppose I've got some Venezuela money as well and things like that.
Yeah, it's nothing like seeing all those zeros. I remember back in the 70s getting a 50,000 lira note, and I'd never seen so many zeros on a piece of money. And what's it really worth? Oh, about 45 Canadian. Most people look at the stock market indices, the Dow or the TSE, but you've previously talked about how there's a lot of action under the surface. You talked about how money is surging from one sector to another. Do you still see that happening? And if so, what do you use that for in your trading?
The rotation is the word to describe that, and that's been very much out there. I mean, for a while it seemed that all of the indices were going up in lockstep with each other, and then we had, I'm going to say maybe a couple of months ago, we started to get some differentiation. Certainly there was a bit of a swing from what's called growth to value, and growth might be certainly the big tech stocks, the big cap tech stocks. Value might be just some routine dull business that just cranks out pretty steady profits, but not flashy. And that stuff kind of got ignored as everybody was maybe chasing the sexier stuff. Lately, one of the things I've been doing with what I'd call that rotation, I've seen that the Russell small cap index, which I can trade in the futures markets, was the hottest of the indices, sort of call it from November until maybe February or so. And then the tide seemed to turn there, and it was weakening while the other markets got a renewed love affair happening. NASDAQ, for instance, was over the past, let's say, since 2009, just smoked the S&P, and come back into beginning of February, it peaked out, and it was falling while some of the other indices were going up. So I'll play these indices one against the other, or just take a net position. So with my contrary position on the overall bullish enthusiasm in the market, one of the trades I've had on here for a week or two or more has been short the small cap Russell, because it's been the weakest here over the past couple of months. And if the market overall is going to fall, then I want to be ganging up on the weakest. It's like when the lions are wanting to chase after a herd of antelope. They don't go after the big strong ones at the front of the herd. They go after the crippled ones back at the tail end of the herd. So to me, the Russell has been the weak one at the tail end of the herd. And I've also taken some positions, just talked earlier there on this, with the S&P, buying some way out of the money puts that are just like cheap like borscht. So I've got kind of a two-pronged attack here on or positioning, I should say, looking for the stock market to have a correction.
We'll find out where the buck stops when we return.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Victor Adair. Victor, in January, you told us that the U.S. dollar was turning higher. It rallied for 3 months until the end of March, but has backed up a bit since then. What are your thoughts on the greenback?
Yeah, the U.S. dollar, I guess, hit the highs that it had been for a couple of years. In the panic last March, when everybody was suddenly having to cope with the virus as it was spreading all over the world, and the dollar being sort of the go-to currency or that haven currency when there's times of trouble, everybody rushed into the dollar, and then over the next 14 months or whatever, not 14 months, but 10 months or so, until just past Christmas time, the dollar was in a downtrend. The dollar turned. I remember this so specifically. I called it an inflection point. I was watching those, I'm going to call them those idiots that were charging into the Capitol building in Washington, and I was shocked at what was happening. You know, I mean, what I'm thinking is people all over the world are seeing this, you know, and they're thinking America has descended into another form of chaos, and that was an inflection point for the dollar. That was the low for the dollar, and it turned higher at that point. You know, a lot of people that will talk negatively about the dollar. I mean, I get it. There's all kinds of things wrong. You know, the trade deficit, the current account deficit, whatever political stripe. You know, you may think that the guys in power are wrong, but currencies trade relative to one another. And I say, well, okay, I understand there's a lot of problems with America, but I mean, do you want to put your money in Europe or, you know, Venezuela or something? I mean, what do you want to do? Or you buy cryptocurrency with it, perhaps, as you're out. But the U.S. dollar did have that rally. It's backed up here, but selectively, against the euro, against Swiss franc, against Japanese yen. The commodity currencies have been steadier. I'm still inclined to like the U.S. dollar, just relative to other currencies. I guess that's my view. So, do I think the dollar could go higher? Yes, I do. But I also, and this is so important to me when I'm trading, I want to have my risk management in there. You know, and I maybe have an idea and I put a trade on and it's not working. I just go, okay, I'm out of it. So. And one of my friends years ago described that as having strong opinions, but they're just weakly held.
The Canadian dollar got above 80.5 cents U.S. a month ago for the first time in 3 years. It's fallen back a wee bit, even as the U.S. dollar has weakened against currencies like the euro and yen. Has the loonie hit its highs for the year? And by the way, Canadians call that golden-colored $1 coin the loonie because it has a picture of a loony bird on it. I've been asked about that. Why do you call your dollar a loonie?
Oh, I'm hoping you're being asked by foreigners.
I'm not telling.
Oh, okay. I suppose there may be some Canadians that don't know why we call it a loonie. Has it hit its high for the year? Well, it could have. Okay, I mean, it did hit a 3.5-year high, and I think that was very much on the back of the rally in the commodities market. The Canadian dollar and the commodity indices, if you say take a 20-year chart of those two things and put them up on the wall, they look pretty much identical, track each other. The Canadian dollar also hit its high at a time when, again, the enthusiasm in the stock market was strong, and the Canadian dollar will take a cue. In other words, over the past year or so, the Canadian dollar is going up sort of in step with commodities and with the U.S. the U.S. stock market. I think, as I said earlier, that there's been a real surge of bullish enthusiasm, not only in the stock market but also in the commodity market. anticipating a lot of demand for commodities. How many times am I going to read the story about why you should be buying copper? It's going to be used in all the electric cars and windmills and on and on and on. And do you think there's anybody in the world who trades copper that hasn't heard that story 40 times? And copper may well go higher, probably would. But I think that we're always looking at timing, and there's been such a surge here in the psychology of the market that we could have a correction lower in the commodity markets, and I think that would take the Canadian dollar with it. And if in fact that happened, it might take us down in the Canada to a point where 80 cents would look high. So yeah, we could have made a high. I am currently short of the Canadian dollar. I own puts on the Canadian dollar. And I'm struggling with those a bit because the Canadian dollar has been like dull as dishwater, and the theta, or the time value on my currency options, is killing me. So this may be one of those trades where I've got an idea that might work, but I've sort of executed it the wrong way. So I may have to trade out of it and just say, okay, that one didn't work, and look for something else to do. And well, we'll talk about trading later.
We'll have more with Victor Adair right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Victor Adair. Gold fell about $300 from its January highs to last month's lows. In your blog last week, you wrote that people weren't interested in gold. They only wanted to buy markets that were going up. You also noted that gold made a classic double bottom in March. What do you see ahead for that shiny, precious metal?
Well, as my grandma might say, the gold market's going to have to pull up its socks. It has definitely trended lower here through January, February, March, and we did make what could be a double bottom or a classic double bottom in March. But, gold's still kind of heavy, and I think it's being ignored truly, because it's going down. If you're somebody out there and you've got some money and you could go and do anything you wanted in the market, they're more likely to buy something that's going up than something that's going down, and gold's been going down. Then there's also the Bitcoin story as an alternative for gold. Personally, I don't buy it, but, doesn't matter. What I think personally, I just see that the Bitcoin market has, let's say, stolen some market share of money that might otherwise have gone to gold. I think gold needs some fear. I think the market is just sort of like, what me worry, everything's rosy. We're going to get past this virus. The vaccines are doing this and that and the other thing. There's all kinds of money out there. The Fed promises to keep interest rates low. Like, who needs gold, sort of thing. So, if there's some fear comes into the market, and fear could come from any number of places. Certainly, there's no shortage of geopolitical flashpoints. Whether you want to look at the Middle East, and there, the key players, it would seem, would be Israel versus Iran. There is the Ukraine. Russia's got 80,000 troops or something on the eastern border of Ukraine. NATO has got half that amount. Who knows? I don't want to be a military expert. And then you can talk about China, Taiwan, North Korea. There's no shortage here. And it would seem like the new president, Biden, is going to get tested. It's been all puppy dogs and fairy tales so far in terms of massive stimulus, checks out to everybody. What a swell guy, and he's kind of a nice old fella and all that kind of thing. And it certainly seems that way, but historically, it seems that a president is going to get hit with something he wasn't prepared for. So, something like that could give gold a boost. some folks would say, gee, how come, with all this worry about inflation, gold's not going up? I say, well, that's how it is right now. Folks aren't buying the gold story as a hedge against inflation. They'd rather run out and, put a 5% mortgage down on a piece of property that's going to go up 20%. Gold just, as I say, I think it needs some fear or a little change in the psychology in the market where gold will be seen to actually be a store of value and something that you want to hold when everything else around you is fading away.
WTI crude oil doubled in price from November to reach a 30-month high in March and then fell back about $10. I see WTI jumped over $3 today to its best level since mid-March. Last year, you frequently told us that crude oil traders were too focused on supply. You thought that weak demand was the key to the market. Has increasing demand been driving prices higher lately?
Yes, I think so, or let's say anticipated demand. If India, the virus situation gets any worse over there, you got to think they're going to be using less petroleum fuels and so on than they would otherwise. We still see that, I guess, on the transport side, the weakness is in jet fuel. Clearly there's not as many planes flying as many miles as there were before the crisis. But yeah, demand has come back from its worst levels. I think, so far this year, the production from OPEC and friends, has been held at a lower level than the market might have anticipated, although at the last meeting here, in effect between May and July, OPEC plus friends, production is going to increase by 2 million barrels a day. America's probably going to come back another 1 million barrels a day. So let's say, I'm inclined to think that there is going to be supply there. The demand side I still think the demand side gets less attention than the supply side when analysts are looking at it. So, but again, my thought on crude, here's the way I've been trading it. We had that terrific run from, call it, roughly $32 a barrel last early November to $62 or $64 a barrel in March, a double. Then we had a break for about $10. The market seems to have steadied a bit now. I think that break was really important. I think those March highs are going to be really important. I can imagine that those March highs might be the highs for the year. And, I'm certainly, as a trader, I'm prepared to be wrong on that. But I would think there's still a lot of bullish enthusiasm in the whole energy space. I mean, last year, energy was the biggest dog. This year, it's been the hottest darling, in a way, in terms of sectors. So, I think maybe a lot of spec money got into the energy space, maybe hanging on here, maybe happy to see crude oil up $3 today. But what I'm actually trading, I've bought some puts and sold some puts. I've got what I call a vertical put spread on, so and that's a longer dated option position. It's a bearish position. That would limit my gains to the downside, but also certainly limits my risk to the upside. So I'm predisposed to bet that crude oil prices are going to weaken here over the next month or two, and we'll see. I may be right or wrong on that trade.
Interest rates hit all-time lows last summer, but have surged higher since Christmas. Does the market see inflation coming?
Yeah, I guess, sure, that's part of it. I mean, that whole rant I went on about money printing and what it depreciates the value of your currency. Certainly, if the government has a certain amount of debt outstanding and then prints 18 times that much debt, then it dilutes the value of the debt that was outstanding before. Yeah, maybe it's just a function of we got to the lowest levels in history for interest rates last August. And then the market started to correct. But there had to be at a sort of a at an institutional level, whether there's insurance companies or pension plans or, that sort of thing, had to be thinking, oh my God, what are we doing with all these bonds? We're getting practically nothing for the things. We've got to be selling these things and put a higher allocation into the stock market. So maybe we're just getting a rebalancing to some degree between, the stock and bond ratios in a portfolio. I don't have a trade on in interest rates in any way right now, but I mean, certainly from time to time I do. What do I think? I think inflation, but I don't know that that's really the big worry, and perhaps it is. I'm a little on the fence or undecided, I guess, in terms of interest rates. I knew I wrote about over the past couple of months what I call a new generation of bond market vigilantes was going to test the Fed, and they certainly have. The Fed has been very intransient by saying, they are not, let me make it clear, we're not going to raise interest rates for a long, long time until things really change. So we'll see. That they'll probably get tested on that again if the economy gets hotter. We've got, for instance, supply shortages. Everybody hears about that, whether it's computer chips, so you can, get a new Ford pickup truck. Lumber prices are just going crazy. Lumber's up 50% since the beginning of March. Doubled since January. But here's another shortage, labor shortage. And it may be something like, 7+ million job openings in the United States. And businesses are saying, we can't get, the right kind of people. We need more than just a warm body. We need somebody with some training. Can't get people to come in here and work. But one of the ways, obviously, to get people to come in and work would be to increase the wages on offer. Maybe if it's that much more than what they can get by sitting home and collecting a government paycheck, like a pokey check or something like that, they'll get motivated and go to work. So one of the keys to real inflation, Jim, would be if we get rising wages, which is why I was off in that direction. And so far, wages aren't running hot. If that started to crank up a bit, then I think we might take another leg higher in yields on the bond market.
You've been trading your own money for 50 years. Do you trade differently now than you did, say, 10, 20, or 50 years ago?
Oh, for sure. I think, when I was pretty new to trading, I thought I knew something. Down on Howe Street, somebody would kind of whisper in my ear that such and such mining company was going to do this or that, and the share price would jump. So, I'd go buy some stock. And more often than not, that turned out to be a disappointment. These days, I'd say I really do understand that I don't know very much, and I spend hours a day reading a lot of very good research. I've been very selective about that. And even at that, I used to say to my son Drew, and we worked together, you have to imagine that there are all kinds of people out in the world that are trading exactly the same markets or more or less the same markets that we're trading. We have no idea who they are, what motivates them, what they know that we don't know, what their time frame is, how big their size is, and so on and so on. And, we are absolutely like little fish in a market with these whales swimming around, and they swish their tail the wrong way, we're going to drown if a fish can drown. I just really think that that's important to, it's a way of being humble, just to admit you just don't know. And then sometimes when you think you know something, you might not know it. You just got it dead wrong, and you can get yourself in trouble. So haven't taken that into consideration. I certainly trade smaller size than I used to. I don't really pay attention to my biases. I mean, if you folks, anybody listening to me here for the last half an hour understands that I'm pretty much a contrarian in terms of the bullish enthusiasm that's out there in the market. That's a bias that I have. I know I've been like that most of my life. So what that means actually in terms of trading is every once in a while I get a real good win, but a lot of the time I'm just kind of paying a little bit to have my bias. I pay real close attention to my time frames when I put a trade on now. It's a whole lot different. I can put a trade on with the idea that I'm going to be out of it in a couple of days, maybe. I'm going to deal with that trade a whole lot differently than if I put something on like the puts I have on the stock market here. I'm going to try to sit with this position for 2 months. And if I do, I'm going to be bleeding theta during that period of time, losing money as the clock ticks. But, so that's important about time frame. A lot of it, I think, that is changed with my trading could be summed up in this question. What are you going to do when you're wrong? These days, I really, really know what I'm going to do when I'm wrong. I don't like being wrong. I don't like losing money. And in my game, for instance, to be early on something that's the same thing as being wrong, the stock market may have a real correction sometime this year just after, I liquidate all my bearish positions and throw up my hands in disgust, and then bam, there goes the stock market. So what are you going to do when you're wrong? And really, what I'm trying to do is understand that I don't need to know everything. I don't need to understand everything. My job is just to try to grow the value of my account. Whatever I can do, it might be in the right place at the right time and not even know it. Okay, great, then I make some money. So it's all about managing risk so that you can live to play another day.
Victor, thank you so much for chatting with us.
Jim, it's always fun. It's kind of therapeutic to talk to you. Thank you.
I've never heard that before. Usually I'm the one who sends people screaming to their therapist. My guest has been Victor Adair. He just retired from nearly 50 years of being in the brokerage business in BC. Check out his website, victoradair.ca. If you have any questions for Victor or any of our other guests, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.